Welcome to India Business Insights. Today, we track the remarkable journey of Zomato, a company that has not only survived but thrived by pivoting through crisis, outlasting fierce rivals, and constantly reinventing itself in India's cutthroat food tech battleground. This is a story of ambition, anxiety, and adaptation. Number 1, Genesis, from Foodiebay to Zomato 2008 to 2012. The Zomato story begins in 2008 when Dipinder Goyal and Pankaj Chadha, frustrated by the lack of accessible restaurant menus, launched Foodiebay in Gurgaon. What started as a simple menu discovery site quickly gained traction among urban foodies. By 2010, the company rebranded as Zomato, signaling its ambitions to go beyond listings and become India's go-to platform for restaurant discovery and reviews. Number 2, first pivot, the restaurant discovery boom. With a fresh name and growing user base, Zomato expanded rapidly across Indian cities and even ventured abroad. The platform became synonymous with finding the best place to eat. But as smartphone adoption soared, a new opportunity and challenge emerged: food delivery. This adoption was possible as the adoption of smartphones expanded in India and Indians started becoming comfortable with online ordering with the advent of Flipkart and Snapdeal amongst others. Number 3, second pivot, entering food delivery 2015 to 2017. In 2015, Zomato made its boldest move yet, launching food delivery. The timing was crucial. Swiggy, founded in 2014 in Bangalore, was already making waves with its hyperlocal delivery model and focus on logistics. Foodpanda and Uber Eats soon joined the fray, setting the stage for an all-out war. Swiggy and the successor of a few global startups in overseas markets proved the potential of this business model. For Zomato, with its vast relationships with restaurants all over the country, it was a natural choice to enter into this business. Number 4, the era of fierce competition, Swiggy, Foodpanda, Uber Eats. India's food delivery market exploded. Swiggy and Zomato became household names, racing to sign up restaurants and users. Foodpanda, backed by Ola and Uber Eats with global muscle, intensified the rivalry. Deep discounts, cashbacks, and marketing blitzes became the norm. At its peak, the market saw record-breaking days like New Year's Eve 2021, when Zomato processed over 2.5 million orders and Swiggy crossed 2 million. Number 5, financial crisis and funding anxiety, 2015 to 2020. So while both Zomato and Swiggy had spectacular early success in scaling up, they were burning large sums of money. At the unit economics level, often the discounts given to the customers exceeded the fees earned from restaurants. Behind the scenes, the battle was burning cash at an unsustainable rate. Zomato faced multiple financial crises, especially in 2016 when global funding dried up. Layoffs, international exits, and urgent investor pitches became routine. The question in every board meeting: can we raise the next round before the runway ends? Zomato, which was primarily a restaurant listing and review site, acquired 9 companies in its quest to expand into overseas markets. The company is making huge operating losses. In FY 2015, while the company saw its revenue triple from Indian rupees 30.6 crores in 2014 to Indian rupees 96.7 crores, its operating loss also tripled to Indian rupees 136 crores. At this stage, while Zomato was said to have been valued at close to $1 billion, saw its funding dry up. It had several marquee investors, but international funding had dried up. The requirement was perhaps beyond the capability of its initial backers, such as InfoEdge, the company that runs Naukri. The company also saw a lot of high-profile exits from its top management team. With coming of Temasek, a big-ticket investor, to join InfoEdge, VY Capital, and Sequoia, Zomato began to feel some relief. Number 6, the restaurant revolt, commission wars. As Zomato and Swiggy scaled, tensions with restaurant partners boiled over. Many restaurants accuse platforms of charging high commissions, often 25 to 30%, and forcing participation in deep discounting campaigns. This led to public protests, #logout campaigns, and heated negotiations. The platforms argued that commissions were necessary to fund logistics and customer acquisition, but restaurants claimed their margins were being squeezed to the brink. Number 7. The Pandemic Shock, Existential Threat and Strategic Reset 2020 to 2021. COVID-19 brought the food delivery industry to a standstill. Orders collapsed and Zomato's losses soared. The company slashed costs, exited unprofitable cities, and doubled down on technology and efficiency. Once again, the anxiety of raising fresh capital loomed large. Zomato's survival depended on its ability to convince investors of a post-pandemic rebound. Number 8. Consolidation, outlasting rivals. By 2020, the market began to consolidate. Foodpanda was acquired and shut down by Ola. Uber Eats sold its Indian business to Zomato in 2020, giving Zomato a massive boost in market share. The battlefield narrowed to two, Zomato and Swiggy. Towards the later stage of COVID, customers also became slightly more relaxed about ordering food online as delivery protocols got established. Number 9. IPO and the Quest for Profitability 2021 to 2024. In July 2021, Zomato became the first Indian food tech unicorn to list on the stock market, raising Rs 9,375 crore. But public markets are unforgiving. Early euphoria gave way to scrutiny as Zomato's losses persisted. Under pressure from shareholders, Zomato shifted focus from breakneck growth to sustainable profit. It shut down operations in 225 underperforming cities in Q3 FY23 and reported its first operating profit in Q1 FY24. Post the IPO, Zomato growth accelerated as Swiggy had initial roadblocks towards fundraising until it came out with its own IPO in 2024. Number 10. The Swiggy rivalry. Can the battle reignite? Today, Zomato leads in market share 58% as of Q1 FY25, but Swiggy remains a formidable challenger with its innovation, first DNA, and stronghold in quick commerce. Swiggy's IPO in 2024 has further raised the stakes, intensifying the battle for both food delivery and adjacent segments like grocery and restaurant bookings. Could Foodpanda or Uber Eats return? Unlikely in the near term, but with India's $15 billion food delivery market still growing, new challengers or global giants could always re-enter if the economics improve. Number 11. Ongoing challenges, restaurant relations, and profitability. Despite recent profits, Zomato's relationship with restaurants remain fraught. Commission disputes and call for fairer terms continue, with many restaurateurs warning that the current model is unsustainable for small businesses. Zomato must balance the demands of customers, delivery partners, and restaurant owners, all while keeping investors happy in a low-margin, high-volume business. Number 12. The road ahead, adaptation and new frontiers. Zomato's journey is far from over. The company is betting big on adjacencies like grocery delivery through Blinkit and B2B supplies via Hyperpure to diversify revenue and defend its turf against Swiggy and future rivals. The next chapter will hinge on Zomato's ability to innovate, maintain operational discipline, and heal its ecosystem partnerships. So while the restaurant business seems to have stabilized, both Zomato and Swiggy are expanding rapidly in their quick commerce businesses. With the early success of the initial entrants, many of the giants of e-commerce have entered quick commerce, so the competitive challenges still remain very strong for Zomato. Zomato has of course showed a remarkable ability to adapt to the challenges quickly and has continuously transformed itself. So let us see who wins the quick commerce war. We have also done another video exclusively on Blinkit and quick commerce. You will find the link to these videos in the description box. Number 13, conclusion, lessons from Zomato's survival. Zomato's history is a masterclass in pivoting under pressure. From menu discovery to food delivery, from financial crisis to public markets, and from discount wars to commission battles, Zomato has survived by adapting faster than the competition. But as the food tech war enters a new phase, only those who can balance growth, profitability, and ecosystem harmony will thrive. Thank you for watching India Business Insights. If you found this story insightful, like, share, and subscribe for more deep dives into the companies shaping India's future.